We have Radhika Gupta now to chat more about this issue and others. MD and CEO at Edelweiss Mutual Fund. Radhika, good afternoon. Thank you so much for your time this afternoon. You're getting busier and busier these days. So getting your time is a bit tricky, but glad you could make it. Radhika, I saw your data point from Edelweiss Mutual Fund. Pretty interesting. 50% of your portfolio can be liquidated in what 3 days flat, or is it 6 days?
Yeah,
But
for small
single
cap,
digit, right?
yeah, for small cap it's 3, for mid cap it's 2, 25% can be in 1, 2 days. Ajay, people have been commenting over the weekend that this is surprising. To be frank, for us, this was not a surprise because well before SEBI started having conversations about this, we have been hawks about liquidity in our portfolio. And I'm so glad that it's becoming public conversation. So liquidity statistics are something we monitor in our monthly investment reviews. It's stuff that we disclose to our board in a risk meeting, and it's stuff that we put in our presentations. In fact, the SEBI liquidity statistics still are a little bit generous because they give you that 20% carve out for most liquid securities. We disclose those statistics without that carve out. So I think for us, liquidity has been a very important part of managing mid and small cap funds, and we've always prided ourselves on holding very liquid portfolios. The other thing with our disclosures is if you look at our disclosures, we don't hold cash in our fund. So it's cash percentage, maybe 1-2%. We don't hold large cap in the small cap fund. So we built liquidity into the portfolio when we are making stock selection decisions rather than saying, chalo 10% cash dal dete hain, 5% liquid large cap dal dete hain to maintain liquidity. And I think I'm very happy that it's becoming part of public conversation.
And clearly, I've always believed that your mid cap and small cap, is worth taking a closer look. Who want to play mid cap, small cap for the long run? In fact, I was not surprised to read that you yourself were actually adding on to mid caps in the rough weather. That actually is, we all have heard about this, proverbial shop, the mithai ki dukaan in a small city where it is written that halwai khud yahan khata hai, or the restaurateur themselves consume the same thing.
Correct.
Okay, so tell us, the nature of conversation is also changed and about mid cap and small caps. There are a lot of stuff being discussed. Some say it is a very risky area, one should not be there, you have to get in and get out, all of that. Then the other side of the equation is that people say that the breadth of growth which India is witnessing, actually mid cap, small cap has to be some part of your portfolio, and you have to play them via diversified basket over 5-10 years kind of a view. What are your thoughts on mid cap and small cap, and the love for mid cap, small cap which the new investors had? Is it justified?
I think my thoughts are that there has to be a middle path, and the reason the problems and conversation has shifted in the direction it is that we have moved away from the middle path. Now, fundamentally, I do believe that if you look at mid caps and small caps, firstly, India has a very unique way to classify a company as mid cap and small cap. Ajay, it is a rank based definition. So mid cap is 100 to 250, and small cap is 250 and beyond. If you look at the average size of a mid cap in the country today, it is 35 to 40,000 crores. These are not mid-sized companies. In fact, in most segments outside of maybe banking, tech, and energy, if you want a market leader in any industry, it is in the mid-cap index. So fundamentally, do I believe that portfolios need to have mid and small cap to capture the breadth of the decadal India opportunity? Absolutely, because if you want a leader in capital goods or capital markets or diagnostics or China plus one or chemicals, these are all mid and small cap companies. I don't think a large cap portfolio in its sense is complete. So I believe that thesis. The problem is that people have forgotten asset allocation. I mean, if you look at portfolios today, they're skewed 70-80% mid cap. The other problem is, I was shooting yesterday on Shark Tank sets, and people who are clearly not very smart or not very aware of investing, if you ask them what they had invested in, their first investment was a small cap fund, and only a small cap fund. Now, this to me is a little bit of a scary signal. So people are looking at last 1 year returns, people are looking at last 18-month returns, and just buying mid and small cap funds. And the regulator is concerned, and they have a right to be concerned, because when this unwinds very badly. You've already started seeing that noise with just a minor 10% correction. To me, for an investor, the middle path is that you hold mid cap and small cap in some proportion, 20, 30, 40%. You hold it via flexi cap fund. You hold it via multi cap fund. And the one thing that this liquidity conversation, in my view, has done is nobody is saying go take, even though my fund house looks very good, go rank fund houses on liquidity parameters only and invest. Nobody is saying that. But what I'm saying is that don't just use return as the only metric to decide where you're going to invest. That to last 1 year return. Also think about liquidity. So it's also brought that to the center. It's moving us to the middle path.
Absolutely. Radhika, good afternoon. This is Vinny joining in the conversation as well. Surely moving to the middle path is what you're saying, not only returns, but liquidity is coming into the conversation now. But, in the near term, then does that mean, finding this middle path, maybe we'll see more controlled flows, at least coming in the mid and small cap side. If, everyone is realizing that, how to allocate your funds, then for these mid and small cap schemes, maybe a bit more controlled flows is something that we could see.
You could. Look, a part of the mid and small cap flows come via SIP. I mean, most of us, if you look at our SIP books, they are very mid and small cap heavy. So I don't think you're suddenly going to see a set of SIPs stopping into mid and small cap funds. And I think retail flows don't vanish overnight. But could flows temper down by 10, 20%? Fresh flows could. Could existing investors who have money in mid and small cap funds perhaps say, okay, I'm going to switch them to flexi cap or multi cap funds, or could incremental allocations happen in multi cap funds? We are recommending the third. So we are telling people don't switch your existing mid and small cap fund holdings and pay a lot of tax, but incremental money at least do in multi cap funds. Things like that. Could behavior of this kind happen? Yes. So that could lead to a moderating of flows by 10, 20%. Yes, absolutely. And if it does, I don't think we should be very upset because the money will go somewhere else. It will go into a hybrid fund. It will go into a multi-cap fund. And finally, the industry should focus on investor experience. Investors coming in, making money not in NAV terms, but in their own growth and being long-term investors. So could happen.
Thanks so much for joining us with that chat. Meanwhile, Radhika's fund has also put out a very interesting presentation, which you can find it. Otherwise, you can find it on the website as well, if I'm not wrong.
If you like this video, then like, share and subscribe to ET Now.